Today I'm going to discuss some great ways to lower the highest single expense we have, our taxes. The first way I'll discuss today is for those of you who have kids and are wanting to save for their education. I know some of you are thinking that the Coverdale IRA or 529 plan is already set up for this purpose, which is true. However, with these plans, you are limited in the amount of money you can contribute. They also control how you invest those funds and control what expenses can be paid for by the fund. Only certain educational expenses qualify. And the only two choices you have if you don't use the money in the plan is to transfer the money to a relative who can use it for educational purposes, or withdraw it from the plan and pay the taxes and penalties that transaction will generate. So you're essentially penalized for earning too much money within the plan. Well, there is a better way. If your child were to invest in an LLC that owns a business or investment. In this way, if planned properly using real estate, then your child would pay no taxes on the cash flow and would have complete control over the investments, as well as when to remove the funds from the investments without penalties. Our next strategy involves treating your investing as a business. And once you do, you're able to reduce how much salary you pay yourself in order to keep the employment taxes as low as possible. You basically have to pay yourself the same amount you would have to pay somebody else to do that same job otherwise. The IRS will most likely reclassify your distributions as salary, which of course would create a higher tax burden for you. In determining your salary, you have to consider all taxable benefits, such as car allowance, even if they are not taxed to you, which may result in a lower salary that other comparable people are earning for the same type of work. You also need to pay yourself that salary at least monthly, since that's when you would most likely pay an employee who was working for you. Now, income taxes are not the only form of taxes. There are also many other taxes that exist out there that can cut your income, just as the income tax does. As a business owner, you have taxes to pay on the supplies you buy as well as on your sales. The biggest challenge is controlling the taxes on the products you sell, because if you don't collect the tax from your customer and are later audited, the burden shifts from the customer to your business. So, unless you're absolutely sure there is no tax due, you should collect it. I think you're starting to see that in order to do complete wealth plan, it will involve all aspects of your life, as well as actually planning how your assets will be dealt with after your passing. You may want to plan on giving some of your assets to your favorite charity, and in the process, it allows you to reduce your income and or estate taxes. Charitable trusts are a vehicle that allow you to control what happens with your assets when you're alive and how they get dispersed upon your death. This next strategy applies to businesses that have sales and involves having your business being taxed in multiple jurisdictions, whether that be different states or even different countries. When you're taxed in multiple states, they will use what is called a sales factor, which can sometimes reduce your taxes by up to 40 to 50%. This is something you'll want a good tax strategist to look into and set up for you. Now, just as using multiple states in which to be taxed in is beneficial, using multiple entity types can also reduce your overall tax bill. And when I say multiple entity types, I'm not suggesting overcomplicating things and creating a nightmare for your tax preparer and having more entities than you need. Using a knowledgeable planner, you'll be able to determine which ones are best and how to benefit your situation. Now, whether you already have a business or you're planning on investing in some real estate and will make that your business, there are a few other aspects to keep in mind besides just eliminating your taxes. The first one is asset protection. You want to ensure to contain things if a lawsuit ever happens. And that's why it's a good idea to not only have a tax strategist design a structure for you, but also have an attorney look at the structure before implementing it to make sure it achieves the goals it was intended to. The next thing some people get anxious about is privacy. They just don't want their names all over in public records, and that's understandable. Although to date, we have not adopted this strategy, Using a trust can achieve that goal. And our final strategy for today is using a government qualified retirement plan, specifically a Roth IRA, which usually I don't advocate using because of the restrictions, but in some cases it can be beneficial and achieve our goal of permanently deferring taxes. Investing in the following assets works well within a Roth IRA because they produce income that you will not need till you're at least 59 and a half years old. All you have to do to manage them is direct the purchase and sale. You won't use debt to purchase them, and they are taxed at a high rate outside of this program. They are gold and silver bullion, doing hard money loans, buying tax liens, and stock trading. So, as you can see, if structured properly, there are many ways to permanently defer paying taxes. And although I have not gone into great detail in any one, this should give you an idea of which ones make sense for you and which ones you don't. This is a good start to have a conversation with your professional you use to ensure you are structured properly. Join me on the next video in this series where I'll share a few more great strategies with you. If you'd like more information or would like to see how you can get involved in one of our opportunities, drop us a line. We want to hear from you. Our contact information, along with more details and some great educational material, can be found on our website at www.simpleacquisitions.com. Now is a great time to invest in real estate. Don't delay in making your hard-earned money work harder for you. Remember, real estate doesn't have to be complicated. With Simple Acquisitions, it's smart, secured, and simple.